Welcome to Bitcoin Escape Plan. Will Bitcoin chop or drop into the new year? That's the topic of today's video. As always, we're going to start off with the 4-hour chart just to give you some quick, actionable information. If you are here in the first couple hours of the video, thank you so much. Like and subscribe. Let's get into it. So, Bitcoin has essentially done nothing in the last 2 weeks, essentially. This is over here. This is the first time we actually dropped below 87.5K. We're now chilling at 87.8K is the new pivot, but look how much price has spent time at that 87.5 level over the past 2 weeks, and how this was really just an attempt to stay above it that we've broken down and failed, and then one more attempt at the higher one that we have failed at the moment, which just doesn't look great. We'll go into that more in the higher time frames, but in the 4-hour, we pretty much just have to pay attention to this is reading as 87.7 for the SMA itself, which we are currently touching. Like if you can look right there, as I'm recording this, price is exactly on the SMA. We've pretty much just chopped back and forth over the course of Saturday. We did break below into the weekend after one more attempt higher. And there's not really that much to say about it. You know, we pretty much have been range bound since we started to drop. There's not really very much preventing price from going lower from here. You know, there's a good potential that it's going to go lower and not higher, just kind of based on where we are in the cycle. If the cycle is going to resume as it has in the past. This is the monthly time frame. Before we look at the monthly time frame, don't forget, go subscribe over at Bitcoin Escape Plan. Slowly adding more articles to it so you can check that out. Basically, you're just going to get more accurate levels without having to listen to me ramble every Monday. And I was late this week on the other one, but I did get the paid preview out. So, Bitcoin Escape Plan. Over here, this is the monthly SMA. We've talked about this a million times. As long as the price is stuck on the monthly SMA, it's not good. We just don't have a lot of evidence on the chart that that's a good thing. This is our best case, is this was, the middle of 2021 when we dropped down, we didn't touch it, and then we rose again. That correlates to our March and April of this year. We didn't touch it, we went low, but then we went back and we did break it. We don't have any historical precedents on the chart where a break of the monthly SMA was a good thing for price. Now, in a long enough time frame, obviously yes, it's a great thing for price. But in the short term, what that typically indicates is that we're going to have more chop and more push to the downside. What are the levels that we've talked about a million times? This is what I would be looking at. About 49 to 74-ish on the first leg of it. And then obviously if it needs to test higher, it'll test higher. It's not going to 15. I don't even really think it's going. If it does go much below 45, I would be very surprised. I've talked about this one being important. About 33 to 39-ish is also very possible that we would see a drop that low. But I feel like there's not enough time for it to do that. If there's one thing that, I interpret from the shape of this chart versus this guy or this guy is we're just basically extending the amount of time, which actually let me try and measure this. So, let's measure it from right before it starts to rip. From right before it starts to rip to where it gets to that price again is just short of 3 years, it looks like. I don't know the exact math for that, but let's call it 3 years. So this here is where it starts to run again. So we would need about the same amount of time for it to get to a point where it's going to start ripping again. And we've barely seen. So this is whatever, like maybe 50 or 60 days less than this period of time. We haven't seen any of this. So where is it likely that we would see that? We would see it in this last part of this time period. Again, it extends to like here-ish, before it then would snap to the upside again. So what are the ranges that are going to be the most important indications for us? This is the top of a monthly candle right here, about 71.5. This is the bottom of the candles earlier this year, about 82.5. That's why we had to drop down here. So it's really going to be pretty boring at any of the time periods outside of those ranges, like it's going to shoot up randomly or shoot down randomly to those levels. And that's going to be what dictates the price from now on, because this just seems like it's getting longer to me. I don't think on the other side of, that downward retracement, I don't think that it's likely it goes and continues to go down. Like if we're extending the amount of time in the cycles, I know a lot of people are talking about a 5-year cycle. I'm still not sure that I'm bought into that. What we really have to accept is it reasonable for us to see this amount of drawdown for such an extended period of drawdown, which again is really only about a year, a little bit over a year in this case. When that happens, our base case now would be about a year from October. So about this time should be the bottom. So do we really believe that the bottom is going to be here in that time period? Is it more likely that it's going to test here? Which this is the one that I think is more reasonable, right around 61. This was a closing candle in the 2021 one, 59 on this guy, and then 61.4 on the other one. As you can see in 2024, we did go back to those. We spent a good amount of time at those. So I really think that that's probably going to be a pit stop, wherever the price does take us this time around. I think that we're likely... I am of the opinion we're going to continue to drop lower. There's a possibility that it shoots up randomly in February or March back towards the weekly and monthly SMA, which I believe is dropping. Yeah, 104.8 now. The Fibonacci pivot one is the one that I pay attention to. That's 106.7. Technically 106.8, but whatever. I've already been saying 106.7, so that's what we're going with. As you can see, we had a reaction to 80K. That was earlier in November. We're still way closer to that than we are to this other Fibonacci pivot on the higher time frames. And really, quite frankly, we just don't look very good on the higher time frames. Maybe we interpret that as a strong reaction and a bounce, but not really when, again, it's touching the SMA and it never touches the SMA and leads to anything good. Meanwhile, we've got gold at new all-time highs. We've got the S&P 500 at new all-time highs, about to touch its own Fibonacci pivot. Be interesting to see the reaction off that, because really with both of these, it's way less apparent on gold at the moment. But there's been like moments over the past couple weeks, really since October, where you could have taken like short plays, but really would have been better to just accumulate for both of these cases. Great opportunities to accumulate, but it just doesn't like make sense to bet against the trend. So when we have both gold and the stock market, and that applies to silver as well. Silver, I know, is doing pretty well at the moment. This just does not look the same. We're not seeing the same correlation, almost directly an inverse correlation in this particular case. So what we really need to take into account is how Bitcoin behaves is it returns to key levels and needs to check if key levels are still relevant in a way that gold does not seem to adhere to. Gold seems to just continue to rip, and it'll spend a long time on a specific level, where it'll stay kind of stuck in a range. Look at that. Really long time. Really long time. And then it shoots up. So that's our only other possibility that we have to acknowledge, is that Bitcoin may get to this point where it's just longer and longer each cycle, but then really, really boring in between for longer as well. Now, I find that somewhat hard to believe that that's going to be in the 2020s. I personally think that that's more likely in the 2030s. This is exclusive for this video. I don't really talk about this that often because I feel like I would be laughed out. Everyone would be like, this guy's crazy. If we look at gold specifically for 1980 to, I believe it was like 2007, essentially, the price is completely flat. It's in a trough for like a long ass time. I'm just going to show you real quick because it's easier than me saying it to you. So there's a couple of things that happened in order to make this happen. So quick history lesson on gold. I do talk about this in the book. I know it needs to be out already. We'll talk about it later. So the U.S., it's still illegal to hold gold as a U.S. citizen until about here. I think it was 73 or 74. I forget. Nixon takes us off the gold standard in 1971, I believe. So what does that mean? What that means is now if you're a foreign government that is holding U.S. dollars and U.S. debt, you used to be able to take that U.S. dollars and trade it for gold whenever you wanted to. That was the deal that we as the world reserve currency had with everybody else. When it takes us off that, and now you're a foreign government that you now have a lot of U.S. debt and a lot of U.S. dollars, and you can't take your preferred payment of gold in exchange for those things. What happens then is it starts to run. It gets released to the American populace again. It immediately dips right after that for a short period of time, and then starts ripping like it has never ripped before, and it tops out in the 80s. Now, there's a lot of complicated like interest rates and bond issues in the 1980s that changed quite a bit about how assets worked in general during that time period, and we're in a completely different paradigm right now, so I don't think that it's relevant to completely compare it one-to-one. But this trough here of the asset being completely boring would have been an amazing time to accumulate over that time for the return that you got now, but you would have had to be patient enough for literally like 28 years almost. I think most people count it till about here, 06, when it starts to really recover. I mean, on the monthly close, that's 684 in 81. It doesn't reach 684 again until technically 2006 for a short period of time. Really, how I interpret this is the 2008 financial crisis. Gold has already started ripping during that time. So it really goes to a point. So 2011, 2012 is where the housing market starts to recover, and then gold goes in the opposite direction. So it'll continue to rise until we hit a period of actual recovery. So we need to think about that in the context of gold right now. So 2008 financial crisis is right here. Gold has already run a bunch into it. It dips initially because everything dips in a recession, and then it recovers long and strong. So if we're to interpret something similar for the time period that we're about to hit, then we are in the phase where gold is just going to continue ripping higher and higher and higher for an extended period of time. And I know this is not a gold channel, but I would imagine gold is probably going to run for a couple years, and it'll have a retracement during that, just like it did over here, multiple times. it had to retest it. And in fact, this one's a little bit harder to read than Bitcoin, I think, because it interacts with it more often. Although this is a long time. That's 4 years before it interacts with it again. And it would be really hard to interpret that as like, okay, we might be done here, and then it just continues ripping, because we would have been at the peak of fear right about here. So I feel like we need to be able to take that into context when we're looking at the other asset classes. I guess I'm going to talk about this as well. This is the housing market chart. I don't go over this that often, but it is really important. This is the first like major dip that we've seen in a very long time. So this pattern where it's multiple daily or monthly closes, this chart only exists on the monthly. Monthly daily closes that were flat, followed by sharp declines. We started to recover. Whatever they did in July for interest rates definitely affected the market in the short term, where it gave us a little pump. But now we're already back to one more month lower, and then we should get new data fairly soon. I'm not sure if we already got that for it's December now, so I guess we'll get October data next. I don't know if we get October data at the end of this month or at the end of next month, but regardless, that'll be important for us to pay attention. But we just don't have a lot of times on the chart. And the reason why I'm bringing this up really is because look at the other time where we have that same pattern on the chart. So this one's a little bit different. We're just chopping, we're flat, and then we drop, and then we just continue to drop. So if you were looking for the 2008 financial crisis, you would have seen it here in 2007. And it looks very similar on SPY as well, where it's just very clear, okay, cool, we've hit a key level. We're now going to drop in the opposite direction. And I would imagine the psychological level was probably 225. That's what it looks like. I don't know what that correlates to in the total housing market value locked, because sometimes it does have a psychological reaction to like a 10 trillion or 100 trillion or 50 trillion or something like that. Numbers are weird like that. But regardless, that's that same progression with gold that I just said. So, gold, where did it top out? In 2011. Where did the housing market start to recover? In 2011. That's that same exact move, where gold had already been ripping by this time and continued to rip that whole time into where the housing market dropped that whole time. So the reason why I'm bringing these up is because Bitcoin is just going to adopt its own stance within that. And this is really important. We don't know what its reaction to a major recession is yet. We don't know. As much as we want to postulate about what we think it is, we don't know, because it started realistically at the beginning of 2009 as a response to the 2008 financial crisis, but we have no existing data or transactions prior to that, and we don't have meaningful volume until like here, 2013, 2014, when they attach it to the US dollar and when it has, legal status in the US as property. That's when it starts to get interesting. And then it still takes it a long time, another 3 years after that point to get really, really interesting. So we haven't actually seen it in peak recessionary circumstances. We don't know how it will behave. Will it give back everything? Will it go back? If we think about it in terms of, Bitcoin is never, anyone who's held for 4 years has been in profit, period. Whether you bought at the top or whether you bought at the bottom, as long as you were willing to wait a period of 4 years, you are in profit again. So there's a possibility that we're about to see that break temporarily. Yeah, so this is October, November. This is the peak in 2021. That's about the peak where we have now. So we could assume then by October of the following year, like we said, that'll be the only time that it'll touch these levels again, or potentially break lower. but there just seems to be more and more demand in this particular asset. I think the rest of crypto is like, yeah, I talk about this a little bit in yesterday's newsletter. I really think the rest of crypto is, at best case scenario, it's going to become kind of Ponzi schemes, but not on purpose for the companies. The same way that like some stocks just end up becoming kind of like where people want to park their money and grow for the time period. Now that's based on some fundamentals of what the company is offering, or their income to asset ratio. There are things that people look at in terms of investing that do cause those kind of rallies outside of irrational things like a Palantir or something like that. Um, with crypto, however, it doesn't even need to have that. We've already seen that with meme coins. There were meme coins that went from $0 in value to having billions of dollars in value in the course of 6 months. Like, I really think that crypto itself is going to just kind of become this place where you can go and print billions and billions of dollars. And they're going to do that by manipulating people's emotions and by making things seem important that are not actually very important. That's why I made a channel about Bitcoin, is to cut through that noise. And I know I'm whatever, like probably 20 minutes into rambling at this point, but this will continue to rise forever. Now, is there a possibility that, very similar to gold, we have extended time periods where it is boring? Yes, I do think that will become possible at some point, but only because there'll be so much attention and liquidity. And I talk about this in yesterday's video for the stablecoins. There'll be so much money that is in the world of cryptocurrency itself that it needs to flow away from the dominant one, which in this case is Bitcoin, to the same as gold. It's not like nothing happened at all between 1980 and, or actually no, this is the earlier one. It's not like nothing happened in the world from 1980 to 2006. That's not reality. There are plenty of other things that grew during this time period. But, Bitcoin may experience something similar if it's not able to cross certain psychological barriers. And the main one I think about is the 1 million. If it fails on its first attempt at 1 million, there's a good possibility that it'll go in the opposite direction, and then it'll continue down for a while before we're able to actually make a sincere push to it. That's my thesis for the 2030s. That's when I think that would happen. 2033 is the first time I believe that we'll actually see 1 million. Say somewhere in here, which that's a long way to go. I don't know why that's reading as it's only 85% away. That's insane. That's not accurate. But yeah, what we really need to take into stock with what's about to happen, and again, I talked about this in yesterday's video, the stablecoins. Trillions of dollars is about to be printed in stablecoins over the course of the next 3 to 5 years. Trillions with a T. A lot of that money is going to flow into hard assets like Bitcoin, like gold, like real estate. It's going to pump up the value of those assets. Eventually, they're going to peak. Real estate's going to peak. It's going to correct. Gold is going to peak after real estate does. Stock market's going to peak. I'll go check out SPY real quick. Yo, thank you so much to anyone who's still listening this late in the video. You are a fucking legend. So this has been a rambly one. So if we go over to 2007 here, same thing. We see it peaks. It goes down for 2 years in that case. And then it starts to recover. It takes like 5 years for it to recover, essentially. So normally it doesn't take that long. It takes whatever, like a year. In these other instances, this is 2000. Yeah, that was longer. It was like 7 years, and then it gave it right back after. I think that we're probably going to see something similar for the stock market, where they've talked about how they expect it to underperform over the course of the next 5 to 10 years. And what I think is going to happen is we're going to peak at some point, and then we're going to start chopping, and then continue chopping, and we're probably going to get close to 350 is the number that I'm really paying attention to, specifically for SPY. I don't know exactly what that is for the stock market, but that's what I would believe would happen over the course of the next 5 years if we do see a major recession. Or we kick the can down the road and we continue chopping along upward for the next 5 years, and then that's when we see it. And then we would see a retracement just to this guy, to closer to 500. And that would be in the 2030s, which I know, super far out. What is the point of comparing those two things? Gold takes a long, long time to recover. SPY takes about 5 years to recover. And then again, it gave it all back after it had recovered. We don't know what Bitcoin will do yet in a similar environment. All we do know is the one that we have evidence from is 2020, the COVID. And really, that was just a minor blip. Obviously, at the time, in context, that looks real bad because we go down to the lows again. It was basically as if those 2 years didn't exist. We went right back to that time temporarily before, obviously, meteoric rise after that. So there's a really good chance that Bitcoin just recovers way quicker than gold or real estate or the stock market does. And it kind of makes sense that it would, quite frankly, because stock market wasn't 24 hours then. Houses are certainly not 24 hours that you can buy and close a house. It doesn't really work that way. And gold as well is like, while there is a round the clock market for it insofar as like it could be being shipped to you, or I'm sure that you can make a purchase of it online, like not during hours. You're just not going to receive it in the same amount of time. Bitcoin, 24 hours a day. If you buy Bitcoin, then within 10 minutes, you're going to receive your Bitcoin into your wallet, essentially. Like that's just how it's designed. That's how it works. So our best case scenario is that we do see a major top in stocks and gold, and Bitcoin just shrugs it off. But that's not currently what's happening. We're seeing the opposite. Where we're seeing a prolonged downside momentum for Bitcoin, still of potentially up to a year. We don't know yet. We won't know until, I would say, really, I've talked about this before with the monthly SMA. I really think we'll know by February. And I know people don't want to hear that because they want to know now, but I think it's going to chop until February. And then February is going to give us more information about, okay, has the SMA curved and started dropping? Has the SMA chopped and started rising again? That's going to tell us what we need to know about, is there continuation or is there not? And we also have to keep in mind that this is still a very small asset class that can be bullied. If they're going to print $3 trillion worth of stablecoins, it would only take 1 trillion of those dollars, a third of that money, to completely double the market cap of Bitcoin overnight. That one is something that they are capable of, but over the next 10, 20, 30 years, that's where it's really, it's like the outcome of it reaching over 1 million is inevitable. It's just a matter of the time frame and how much it's manipulated during that time. Because you got to remember, this is a 24-hour asset, which means people can make money off of it going down, the same as they can make money off of it going up. And I do think that there's going to be a lot of people who are invested in trying to make money off of this downward movement for Bitcoin, while they are also passively stacking it. But I think we're going to leave this way behind moving forward. I talk about this a lot in my private group. I think realistically, once we are able to break 250-ish and continue upward towards a million, I don't think we ever see 250 again. I do think that there's a scenario where if we fail off of a million, that is going to, like I said, it'll chop back to 750 and back to 500, and even as low as 250 in that circumstance. If it's really, really dark in the 2030s, like if something happens with quantum that completely wipes out all of the major banks, let alone Bitcoin itself, like that's going to mess up the economy in a way that we can't really fathom, in like sitting here with our iPhones. Like it's not going to be reasonable for us to anticipate something of that scale. And our only real reference at the moment is COVID and the 2000 crash, which are just not going to be as meteoric as quantum computing at that point is still going to be the Chinese and US governments are going to be the only ones that have the money to turn it on, which means that it's either going to be the Chinese or US government that essentially attacked the banks themselves, which doesn't make sense. They'll kind of go out of their way to make it seem less insidious than that. And they'll do what they're currently doing where, the US seized about $15 billion worth of Bitcoin from these hackers. They didn't give the money back to the people that the hackers stole it from. They kept the money. The governments are going to do the same things with quantum computing, where all of a sudden there's going to be, quote unquote criminals or someone who didn't pay their taxes exactly the way that they were supposed to. And there's going to be a quantum attack that just wipes their bank account entirely. And the government is just going to take it. They're not going to feel bad for taking it. That's what they're designed to do, is to protect borders. In this case, they're imagined ones, and to collect taxes. That's what governments do. Hate to break it to you. So while Bitcoin will probably migrate to something a bit more quantum resistant by that time, I do still think there's a great chance that it's just going to shoot the value of the price way, way down whenever that narrative actually truly pops up. Right now, it's just something people use to scare people, but it's not. Quantum is not really at a scale yet where it would be feasible to really affect the entire network for Bitcoin. Maybe you could affect one wallet at a time, but I don't think that quantum is advanced enough to be able to do that in any meaningful way at the moment. But that's kind of what we need to keep in context. I'm going to leave. I can't believe I rambled for this long. Is what are the fears that are going to possibly drag this lower? A stock market crash, a housing market crash, not gold itself. Gold will continue ripping during all of those, and it'll be clear once gold has stopped that we're in a recovery. We don't know how Bitcoin is going to behave yet in those circumstances. That's kind of what we're waiting and watching for. Will it react quickly to a stock market crash or the housing market crash? It was designed specifically as a response to it. So it's designed to take some of the pain from that and should get more resistant over time. But that's what we're looking for in the next couple months is what is the... Hold for plane. I don't even know if you can hear that. What is the reaction to the monthly SMA? And what does it tell us about, do we need to return to these levels? Or is it clear we're going to chop higher and just ignore the normal 4-year cycle, which I don't believe is the case, but whatever. What do I know? Anyways, thanks so much for watching. Like and subscribe. I'll see you tomorrow for tomorrow's newsletter.